Good morning, everybody. Welcome to the Trading Market Technicals Morning Call video for Tuesday, September the 4th. Welcome back. I hope everybody had a great, relaxing weekend. Today is Tuesday, back at the markets, and the summer is officially over, and hopefully volatility and volume will be creeping back into the markets, which I do suspect it will happen. I do think this week's going to be a quiet session today, tomorrow, rolling into Thursday. Looking at the economic board, ISM numbers and initial jobless claims come out on Thursday. We do have that, and also ADP private payrolls, they come out on Thursday, and then of course the big non-farm payrolls on Friday. So today, tomorrow, I would suspect lighter volume, bigger traders coming back, take an extra day or two, and then Thursday, Friday we pick up in volatility, and then of course next week we should be hopefully back up to full swing. Can't wait. August has been extremely quiet, as you can see here on the chart. We've been just chopping around doing absolutely nothing. But we had a couple of risk events over the weekend. We did have ECB Draghi speaking. Really didn't say much of anything other than the fact that he was comfortable with bond purchases up to the 3-year maturities, and really didn't do much. We did have one China PMI come out over the weekend, and they're in contractory territory right now. They are contracting below the 50. So, like I've been saying, I think all eyes will be back on the China since it is the second world's biggest economy. And once the Euro and the Eurozone area is sort of been contained, or at least properly managed, and the ECB taking action, then I think all eyes will be back on China. And I did mention about the China trade, the commodity sector. Now that's going to take a little time, but we are watching that closely for opportunities in that area. Okay, so we have basically the August is in the books. We're done with that, and now we're moving forward to the fourth quarter. September usually is a down month. History repeats. But the first week of September usually comes in pretty much with gangbusters, everybody coming back to their trading desk, and markets actually moving in the direction where it ended in August, and that's really right now to the upside. So I do see a continued move to the upside until otherwise. Now we do need a catalyst for this market to move lower. We don't have bears don't want to sell, bulls are really not buying, and the market's just kind of drifting to the upside. That's usually what happens. I definitely am still in the camp of a bigger move lower. Markets just can't keep drifting in this area, and even if we do move higher, I do see risk a little bit more to the downside. So I would look for playing a continued trend, which is in overbought state. We have not unwind our overbought signals from our momentum indicators. However, the trend is still up, so I'd be looking continually to play the trend in that direction until we get some sort of correction. Now, the best way to play this thing is that if the market continues to move up higher, and we are no volume, and we start getting up to this area here again, that's going to be a great spot to look for, to start taking some objective shorts. And trying with tight stops if you are even looking to swing trade. But again, we won't know until volume comes in. When volume starts to pick up, we'll really get a better handle on what's happening here. So we had the Bernanke speech in Jackson Hole. He didn't do anything, but he just left the door open, so they bought the market. And they rallied to that to buy the market, and the market's up now. The S&P's up about 2.5 handles this morning as I'm recording this. So we're gonna have our, as you know, our elections coming up soon, so there's going to be a lot of uncertainty about what's going to be happening with that. So I just say, look, the markets right now are looking for some sort of direction, and it could go either way right now. And I think markets tend to continue to rise until otherwise. So once the market stops in this area up in here, and we can get some sort of a catalyst to the downside, then the markets will probably move that way. And all it needs is a little push, one little push, and the markets will go either way. So unfortunately, we're left with that from August. So we really don't have anything much to say other than the fact that the markets are overbought, and they can continue to be overbought and continue to move higher until otherwise. So let's just be on our toes, and let's take a look at some of these indicators now. But you can see here just real quick on the S&P 10-minute chart, there's the whole month of August. We just basically rallied in a range, popped up a little higher here, sold off down into this range, back in, and we've just been back and forth here. with the indexes kind of whipping around. A lot of the stocks really haven't done much of anything. All right, so you can see really same thing with the NYMO, right? This is the McClellan oscillator, and as you can see, we can go either way, right? We have plenty of room to the upside to be overbought more, or we can be extremely oversold. So right now, since the middle of July, we've just been chopping around in this range here, plus 20, negative 20. So really not much saying much, but I wanted to get these indicators out to you so you can see where we are. Now look at the VIX. The VIX kind of broke out of its band, and look what happened. We're rallying up, but really with no real conviction here. So I think that the VIX can actually easily fall back again. We rally going into non-farm payrolls, and then we'll see what happens. But I do think we can get one more test back lower. Again, this isn't really telling me much of anything. Let's take a look at the S&P with the 50-day moving average. You see, we're still overbought. We are rolling over. We're still at 71%. And so stocks are still high up in this area. If you look at the 200-day, stocks above the 200-day moving average, you broke out of this range, but this is still reading in overbought territory. So we are overbought, but continue to stay overbought. Okay, so just want to really make that clear. Copper still showing us signs of weakness, as you can see. Lower high, lower high, lower high. We are in this trend line here, so we do have this little symmetrical, as you can see here, with this from this little guy here. But we still have support above the 20 to 50 here. Confluence area support around the 340 area. So we really need to keep an eye on that. Wanted to show you the bonds, and I mentioned bonds here. Now, bonds are rallying here. This is the daily chart of the 30-year, and as you can see, markets rallying, bonds are rallying. Something has to give here. We can't say that somebody's got to be wrong, and usually the bond players are usually right before equity players are. Just wanted to make that note. But again, we're rallying back up here. We could have that test again of this heavy resistance of 152. A break above there I think would really cause equity markets to be to have some selling pressure here. So just keep an eye on that. Want to take a look at one more as the transports. Now, the transports are in a do-or-die state here, right? So we have our trend line way back from the June 4th rally. We have our lower high, double top here, lower high here, and now we're back in this trend line. So we need to really rally right now, or if it breaks below this trend line, I do think you're going to have issues with the markets rallying from here. So again, another sign where it's going to be a do or die, a break, a test, and you'll see on the index charts, which I'm going to show you right now. Okay, so we have the S&P daily, right? This is the cash, and we're sitting above this bearish rising wedge, which it's only a bearish rising wedge if it breaks lower. But we do have some big areas of support, as you can see, right? So we want to really keep an eye on this. We've just been chopping around here, doing nothing, little dojis for basically the whole month of August, and look at our trend line. Look at our momentum indicators rolling over. No signs of actually turning back up again. Now that obviously could change with a big catalyst to the upside, and then we get a big hook, and then we can rally again. But it's going to take a little time here. So MACDs are rolling over. Histograms are making lower highs as we speak here, and then we have our stochastics moving lower as well. Okay, so not a real good sign as of right now. I mean, I like to see everything in sync here. But again, we've rallied since June 4th. Markets need a breather, and a little pullback here is healthy. Take a look at the spiders, and this is just a spider. Look, we had a little bit of volume. Look at the volume on Friday. I mean, this is pretty telling here that you can see that we've been fighting back and forth on the spiders. It didn't look much on the cash chart, but again, we have to really take this out and then consolidate above this area here, which would be support, before we take another move higher. So we still have a lot of work to do to the upside as well as the downside. Okay, take a look at our Russell. Same thing here, critical area of support, 81, 89, call it 82 if you will. And again, bigger volume than usual. We did have a little bit of a hook here, so the IWMs did momentum indicators pull up, but look what's happening. MACDs are starting to roll over again, and so is the stochastic. So concerning. These charts are still concerning to me, and I do think we need a lot of work. And this is the IYT, which is the transportation index. Again, in this big symmetrical. As you remember, I had a head and shoulders, possible head and shoulders. Didn't happen, so now we have this long-term trend line sitting there. And look at our momentum indicators. Just looks really nasty. Nothing really to write home about if you're a bull. Okay, and our last tech thing is the SMHs, the semiconductor. held above the 200-day, had a nice big pop here on Friday. So this is something that we need to see if we can continue with the momentum. It doesn't have to lead, but we don't want it to lag as well. So let's just keep an eye on that as well. And Big Cap Tech, Q still holding that double top. As I mentioned, 67.45 would be a sell signal here. And look what happened. We went right to the penny, and then we reversed. So, but if you look at our volume area here, still volume pretty light, but better than the previous week. But we did get a red candle, so we did have a little more selling come in here. So 67.45 would be our sell signal in the Qs. All right, guys, not much to say from last week, but this week is going to be important and rolling into next week. Keep an eye on those economic news releases coming out Thursday and Friday. Really being some big numbers. ISM weekly jobless claims, and then Friday, of course, the non-farm payrolls, which is a big monthly number, and we want to see if that's going to change or contract. So that's going to really persuade Bernanke on what he's going to do. So Friday is going to be really important, okay? All right, guys, have a great day. Welcome back, and good to be back. And hopefully volatility will pick up closer to the end of this week, and then we can really get back rolling, doing some trades and being active next week. All right, have a great day, everybody. Talk to you tomorrow. Bye-bye.